Good morning, everybody. It's Monday, April 29th, 5:26 a.m. Central Time. Grain markets are mixed this morning. July corn futures down a half cent at 449 and a half. July soybeans up 4 3/4 at 11.82. July Chicago wheat down 10 and a quarter at 6.12. July Kansas City wheat down 1 1/4 at 6.53. July spring wheat up a half cent at 7.04. Before we get started here, Mackenzie, we hit 14,000 subscribers on YouTube on Friday, I believe.
Yep, sure did. Pretty exciting.
We would like to thank you guys for subscribing. One thing that I'd like to make you guys aware of is that we make like no money off YouTube. YouTube's going to pay us $925 this month. And the reason for that is because you got to think about the percentage of the population that cares about what corn and soybean prices do on a daily basis. Do you think it's 1/10 of 1% of the population?
Oh, I think that might even be a stretch.
That might be a stretch. So we will never make any money off YouTube because there's not enough people out there that care about this stuff on a day-to-day basis. So this is very obviously a cheap sales pitch for our premium subscription, which you should absolutely sign up for. That's what floats the boat for us. Without the premium subs, what we do here does not exist. It shuts off tomorrow without the premium subs. So if you guys are not subscribed to the premium stuff, check it out. I'll talk about it more here in a second. Let's jump to this tornado business.
A flurry of tornadoes ravaged the Midwest over the weekend. On Friday, 106 tornadoes destroyed homes and other buildings across 6 states, with Nebraska and Iowa being the hardest hit. An EF2 and an EF3 tornado were both reported in the Omaha area. Despite the catastrophic damage, only a few people suffered injuries and no fatalities were reported. Then on Saturday, several tornadoes caused devastation across Oklahoma. Besides the extensive structural damage, 4 fatalities were reported, as well as numerous injuries.
When I saw the pictures of the tornadoes, I thought they were fake. They were so incredibly huge and crazy. Let's run through some rainfall totals. So some areas caught more rain than expected over the weekend, and some areas caught less. The heaviest amounts would have been Missouri, eastern Kansas, west central Illinois, and Oklahoma. There were areas of those states that saw 8 to 9 inches of rain locally. So there was some localized flooding that occurred along with all of this. You look at some northwest areas. Minnesota got wet. South Dakota, Nebraska caught quite a bit of rain. North Dakota, more scattered. HRW wheat country, largely in Kansas, missed out on this. Central Kansas, western Kansas, dry. Maybe some of the areas in Oklahoma, some of Colorado, some of like southern Nebraska caught some rain, but those HRW wheat areas missed out. The forecast is wet. We've got more rain coming. There's more rain on the radar this morning. This is the next 5 days, what's expected on my screen here. And then if you zoom in, you're talking another inch or 2 inches for Iowa, Missouri, Minnesota, Wisconsin, southern 2/3 of Illinois, eastern part of Kansas, again, parts of Nebraska. So the forecast is wet. Again, HRW wheat country, not so wet, and that continues to be a problem. I'll be curious to see what ratings say today. Rain on the radar this morning, very much active over Illinois and the Gulf Coast also. USDA will be out with its crop progress report after the close today. I think a lot of progress was made last week, but I think now you're going to see some delays in some areas. Does the market care about any of this? No. Corn futures are down a half cent to start off the day today. Typically in like a crazy year like a 2019, market doesn't start to care about delays until another, call it 2 or 3 weeks from now. So we'll see what happens, but things are going to slow down a little bit.
Fund traders have trimmed their net short position in the corn market. CFTC released weekly commitment of traders data on Friday. During the week ending April 23rd, the funds were net buyers of 46,000 contracts of corn. The net short of 226,000 contracts is historically large. Funds were net buyers of 17,000 contracts of soybeans. The net short of 139,000 soybean contracts is also historically large. And the funds were net buyers of 20,000 contracts of SRW wheat on the week.
These are still substantial net short positions, but we saw some substantial short covering across these 3 contracts, corn, soybeans, SRW wheat. The funds covered 83,000 contracts worth of net short. So that number that was closer to like 540,000 contracts is now at its peak, I think, is now 440,000. So we've seen some short covering. It's absolutely helped the wheat market, maybe corn market to a lesser extent, and then the soybean market to an even lesser extent behind that.
So if you guys have not checked out our premium content, you sure need to do so. Joe, can you tell me about some videos you put together last week?
Chris Barron was on Thursday. Equipment costs, it's a huge line item. I think it's the second biggest line item for most farmers, according to Chris. And the inflationary aspect of equipment is incredibly interesting. This is a huge deal when it comes to production costs because I think that most people track their equipment costs incorrectly or inefficiently, or just don't pay enough attention to it. Chris covered all of this. He had some free stuff available, some free downloads. On Friday, Jim Urio was on. We talked about forever wars and government spending, how the government has pretty much gone off the rails with spending, debt to GDP ratios, interest rate scenarios, all of that stuff. If you guys want to see the premium content, again, this is the best and really only way to support what we're doing here. Go to standardgrain.com. You can sign up this morning. This is a $50 per month subscription. You can cancel at any time. There's no other fee. There's no other obligation. It includes our morning email, which goes out at 5 a.m. Central Time. It includes all of my grain marketing recommendations, corn, soybeans, wheat, cash sales broken down by crop year, and percentage. New premium video every single business day, guys. Check that deal out today.
An uptick in biofuel feedstock imports is impacting the U.S. soybean market. The rise in imported alternatives, such as used cooking oil, tallow, and canola oil, has reduced demand for soybean oil. As a result, crush margins have fallen, and soybean processing plants have started seasonal maintenance earlier than usual. Plants are also remaining closed longer than usual. Government incentives have led to an increase in soybean crush expansion, but there are now concerns over the amount of capacity needed due to a rise in competition. In January, soybean oil accounted for 32% of the feedstocks used to produce biodiesel, a record low and down from 44% a year earlier.
So 20 million bushels of crush capacity were offline in April, including ADM and Cargill plants. Bloomberg did a nice job with this. They had a quote from the CFO of Bunge. He said, those projects that were well underway are going to continue to get completed, but really anything that was proposed or in early stages, we've seen a number of those put on hold. That's partly because soybean oil isn't competitive against the alternative sources, which are cheaper and have low carbon intensity scores. One of the problems here is that we're only selling green diesel into 3 states, and we need to expand that. I'm not going to say much more about this. Pete Meyer is going to be on in today's premium video. He's our resident biofuel expert, and we're going to get into detail here.
Drought is forecast to impact one of Russia's main wheat growing regions. A Russian state meteorologist is forecasting that through May, drought conditions will affect the wheat crop in southwestern Russia. In central Russia, spring planting and winter grain crops are expected to be satisfactory. Due to the drought, some industry experts have lowered their crop forecasts. According to Russia's ag ministry, the country's grain harvest is projected to decline to 132 million metric tons, down from 144.9 million metric tons last year.
We've seen some more friendly wheat stories emerge. Russia's got a problem. We've got, I think, some issues here in the United States. Russia, of course, is the big dog when it comes to wheat exports. And if this number declines next year and they have crop problems, it's absolutely supportive in regard to prices. We've talked a lot about how cheap Russian wheat has flooded the globe and it's made the U.S. non-competitive, and that's been part of the wheat market's problem. Maybe that changes next year.
The Federal Reserve's preferred gauge of inflation soared last month. The core personal consumption expenditures price index, which excludes volatile food and energy categories, increased 0.3% in March compared to the prior month. On an annual basis, the index surpassed expectations with a 2.8% gain. Consumer spending last month exceeded expectations with an increase of 0.5%, the largest monthly gain this year. Consumer spending has remained robust due to a strong labor market. The combination of high inflation and steady consumer spending is likely to prevent the Fed from cutting rates anytime soon.
The Fed is screwed. So if the Fed keeps rates unchanged or has to raise rates, the interest expense on the national debt will become the top line item in government spending. It will surpass Social Security, I believe, next year. If they cut rates, then you've got more inflation, which is the last thing that anybody wants. So they're in a very, very difficult situation, and they're in a very, very difficult situation in what is supposed to be a good time. This is supposed to be the good times in regard to the economy. We're not in a recession. We got positive GDP prints. Everybody's got a job. Stock market's doing well. Like, things are pretty good. I know inflation. There's always some bad stuff. Like the inflationary aspect is bad. But what happens when something bad happens again? That's one of the big problems that we have here. We talked the last two videos we did with Jim, including one on Friday, we went into some detail here. What did cattle do on Friday?
Feeders closed an average of $2.07 higher. Week over week, they were an average of $6.60 higher. Live cattle closed an average of 56 cents higher on Friday. They were an average of $3.82 higher week over week. Cash cattle trade was higher last week. Down in the South, cattle sold mostly between $182 to $184, which was steady to $2 higher from the prior week. In the North, cattle sold between $184 to $186, which was $1 to $3 higher than the previous week. Box beef ended the week mixed last week. Choice closed Friday at $297.14. That was up $1.47 for the week. And Select closed Friday at $288.71. That was down $2.11 for the week.
Is the bird flu scare over? There were some new headlines on Friday, I think, but
exactly. And I really ate my words. I thought it would impact the market, but it sure didn't. So I don't know what will happen.
The markets can't be predicted, Mackenzie.
I know, but I feel silly.
Well, that's welcome to the club. Outside markets on Monday, guys. U.S. dollars off a little bit. Stocks are higher. Bonds are higher. Crude oil is down 16 cents in the June WTI contract at 83.69. Have a great week, guys. We'll talk to you on Tuesday morning.